Okay, I got some subscriber requests to go through here. I got 17 stocks on the list over here. So we'll go through these and I'll give you a technical opinion. Not going to research fundamentals on all these. We're just looking at technicals here and see which direction to trade it. Somebody asked about the volatility index. I got VXX, the iPath S&P 500 VIX short term. And this does look oversold right here. We're trending pretty good. The white Tinkinson line here stays closest to price when it's trending, and we're trending down pretty good. It almost looks like we're pulling back here a bit. What I would watch for an increase in volatility is for price to get back above this white line, potentially pull back to the cloud. So that usually doesn't bode well for stocks, but volatility can stay oversold for quite some time, as you saw right here. And the overall trend is down, so definitely in a bull market here for some stocks at least. FISV. This stock trades some pretty wild swings. I don't see a buy opportunity up here. I like it at the bottom of the range. We had a nice snapback at the 200 moving average right here. But these are some pretty wild swings this thing takes. The Kijinsen line here can be support, so possibly a pullback around 117 could see a bounce. We got the 50 moving average coming in here, but I don't see a history of price really respecting that 50 moving average, or really even the 100 moving average. So I don't really like this for tradability. If you're in it, I would consider taking some profits if you're swing trading. For long-term investment, it's a pretty nice chart. And nothing wrong with that chart. That is a beautiful uptrend right there. So, looks plenty investable to me, just a little extended right here. It did make a new high, so that high right now is going to be resistance. So I would look for a pullback if you like that. TDOC, this chart's looking bearish. We took a really swift fall below the cloud. I don't really like stocks that trade like that. That thing just from 310 down to about 180. We are kind of at the bottom of what looks like a consolidation range right here. Can you see it? This period of consolidation. We spiked above it and then failed. And now we're back down at the bottom. We've also broken below the 200 moving average. This stock was trending pretty good for quite a while here, and now these moving averages are rolling over and trading below the 200 moving average, so I'm not really liking what I see in this chart. Long term, it's a nice looking chart. It's a little overextended. I like to draw trend lines on something like this. So, grab the tool here. There's different ways of drawing trend lines. We can see we had, let's bring it like this. So yeah, we're kind of pulling back to this long-term rising trend line. If you like the stock and you're not in it, maybe scaling in carefully. If you don't like downside risk, watching your position lose money while you're waiting for it to do something. Like I said, though, we are kind of at the bottom of this consolidation range, so it could go either way here. MasterCard, credit cards are getting hit here. It is a nice rising long-term trend line, and I own MasterCard. I like this stock. I just ride these waves out. I don't worry about it. Still a good company. Pullbacks to the trend line are buying opportunities, in my opinion. COVID crash, we came below the trend line. We saw that in a lot of stocks, and then have recovered, and we're back within the trending channel now. Visa took a big hit. That's a big red candle right there, right down to the rising trend line here. I usually don't like a big bearish engulfing candle like that. That's a pretty nasty looking candle right there. But I mean, you got to ask yourself, are the fundamentals for Visa broken because of current state of the economy or expected inflation, interest rates, etc.? So anyway, yeah, this could be a buy opportunity here down at the bottom of this channel. Flat cloud here tends to be support. I own Visa as well, and I just hold it. I'm not worried about that right now. PLXB. This thing's been trading on some. This thing has some pretty big gains over the last 10 months or so here. Let's look at a long-term trend. Don't really care for this chart. We're getting kind of at the top of a range here. I usually don't trade charts that look like this, or I mean, I don't invest in them, but things like this are tradable. If you're an experienced trader, we do seem to be bouncing off the 50 moving average here. Overextended up here. Looks like price has tested this area 3 times. It looks like it's going to get rejected again. If you've been trading this, it does look like a good place to maybe take some profits, but the uptrend is still intact. So it's up to you. If you're into picking tops and bottoms, and if I was into picking tops, I'd kind of like this top here. Don't really like the way this thing trades. So if you've been playing with that, I like the idea of taking profits there. Could go either way. I don't know what the fundamental story is. So if you know more about the fundamentals and you want to hold it, then that's up to you. Just looking at technicals here. The Qs, Q, under pressure, falling below the cloud, snap back up, came into the cloud. Interior of the cloud is considered indecision, and price could break out in either direction. So a test to the bottom of the cloud, and then a breakout above the cloud, and a moving average cross, your Tinkinson line here, and the Kijinsen seen right here in red. These two averages cross. That's pretty tradable. I like to see the price on top of the Tinkinson line and the cross, and that's a good place to get in. So and you can ride the trade out as long as it keeps its bullish posture and Tinkinson remains above the Kijinsen like we saw here. So right here we had a TK cross going down, a test of the 100 moving average, and then Tinkinson or TK cross going back up. So these TK crosses, if you were to trade this and just stay in this trade, as long as Tinkinson remained above Kijinsen, you would have captured a large move here from about $284 to $324. So it looks like this we're setting up for another TK cross here, but so this area, this flat area of the cloud is resistance. Top of the cloud connect is resistance, and then of course we've got this top here that's resistance. So this has some wood to chew before it has sees all-time highs again. Usually when price is below the cloud, you're not looking for long positions. But you can trade the TK cross as long as the moving averages stay in the proper orientation with Dickinson trending above the Kijinsen. You can capture some pretty good moves using that method. So another thing to trade is a Kumo breakout. The cloud here is called the Kumo, the interior of the cloud. And you get the TK cross and price breaks out of the top of the cloud. And then you're looking for price to continue trending like you see here and above the cloud. Okay, this twist in the red cloud kind of indicates a dismal future. So I like to see this twist again. Looks like it's setting up to twist again actually right here. See how the cloud is getting converging right here and setting up for another bullish twist. So you want to see that bullish twist, and you want to see the TK cross, and you want to see price break out of the cloud. For all of those signals are bullish. Okay, HOFV. Someone mentioned they got a good trade out of this, and I'd actually take profit right here. If you got into this, just because looking at the long term, I don't know what the fundamentals are or what they've changed, but I wrote about this recently. This was setting up for a TK cross. Someone had asked me about it, and these moving averages cross. Dickinson is just going straight up here. That's a pretty sharp move. If you want to trade this, I would watch for a pullback, and I would watch for this TK cross to remain valid. We're starting to get a straight up cloud here, which indicates momentum is too fast, but that is a huge bullish engulfing candle. When I look at the long-term 2-year chart, I don't like this chart. I don't invest in charts that look like this, but they can be tradable if that's your cup of tea and you're a swift action trader, quick with your trigger finger, can execute a good trade. I would actually take profit from what I see here. That was a nice move. Let's see. ZKIN, TK cross. Just cross going back up. We got a long wick here, which indicates this thing took a huge spike, pulled back and closed right here. Kind of closed it back at the top of this range here where it topped out here before. This is a bullish signal. It's a little overextended. The bounce from the 50 moving average was probably a decent buy opportunity because we can see it's responded there before. Pulls back near the 50 average and responds, and now we're back to being overextended. Trading the TK cross on this one's a little tricky because of the momentum and the volatility. We had a lot of mixed signals in here where the Dickinson crosses Kijinsen and back and forth. So on a real volatile chart like this, it's kind of hard to trade the TK cross. I like the pullbacks to the 50 moving average on this one, I think, or to the cloud. Pretty steep cloud right here indicating momentum is too fast. So I kind of like this one for taking profits if you have them too, especially looking at the long-term trend. Quite often trends like this are not sustainable for long. And we're getting back to kind of an all-time high here. Let's see, I can only do a short history on this, so apparently it's a fairly new ticker symbol. This could continue, you never know. You follow the trend, okay? So overextended here. Even though we've had the TK cross, this thing just trades pretty wildly. This thing can shoot up 100% in a short amount of time. So I like pullbacks on that. ESEA, huge green candle here, TK cross, nice bounce from the cloud right here. So we dropped into the cloud, kind of turned it along the top of it, and broke out. So here's your Kumo breakout right here. So that was your buy opportunity right here. Now we have a TK cross, which ultimately stimulated this huge bullish candle. So I don't like to chase momentum, and I wouldn't buy it right here. Let's see what the long-term trend looks like. Yeah, this looks like an opportunity to take profits to me too, because I just don't like charts that look like this. You know, these aren't the kind of things I invest in. I just trade them. So nice trade if you got in it, and I would actually take profits in that. It's better to take some profit than to try to be a pig and just wait for, you know, the most money you can possibly get out of it, because picking exact tops and bottoms is difficult. And just looking at the long-term trend, looks like an opportunity to take profits to me. TAOP, this thing is trading on some wild price action here. It's gone from $4 to as much as $17 in just a couple months here. So I'm not sure what the story is with this stock. I wouldn't be buying it here. I don't like to chase momentum. Possibly a pullback to the Kijinsen line here. There's kind of an area of support right here. See the top of these candles? How we kind of had this flag pattern going on. This flat top area, and we broke above it with a nice bullish engulfing candle. Came back down, tested the uptrending Tinkinson line here, seen in white. So if you're going to trade this, I would look for price to hold this Tinkinson line, but it's rising pretty fast. So, but this thing is trading on some pretty wild price action here. 5-year chart, a lot like the others we looked at, that I'd say it's a profit take opportunity if you're just trading it. I've seen a lot of charts like this, and people see this and they jump in, and a long-term chart like this, and then it just watch this thing just burn off for months and months. So I really don't like messing with stocks that have charts that look like this, especially if you're trying to chase momentum and you're just asking to get your tail flamed. IZEA, huge uptrend right here. This thing went up like 700% from $1 to $7 in just a few months. Pretty dangerous to try to mess with it now, I think. Looks like it is trying to get bullish again. I would wait for a Kumo breakout, a breakout from the top of the cloud. We're getting a TK cross right here. This could turn bullish again. Something to watch. Usually with something with this big of gains in that short amount of time is very risky. We've got a bearish cloud over here, which indicates a dismal future. This may cross. If we get a Kumo breakout, this is gonna twist and turn green again. So I would watch for a Kumo breakout on this one. What I mean by Kumo breakout is I want to see the entire body of a green candle above this cloud. Just a intraday price action where it pokes its nose up here before the close is not a valid Kumo breakout. I want to see the full body of a candle above this cloud. Quite often it'll break out and it'll pull back and test it and then take off again. And that's a great signal there. If it can break out, come back and test the cloud, and continue in up direction is a very bullish signal, especially if you got your TK cross. Another thing we want to see is, I don't talk about too much, is this lagging line. See this line right here in green? This mimics a chart action, and it's pushed back, I believe, 26 time periods. Just the opposite of the cloud is broadcast forward 26 time periods. So for a good long trade, you want to see this lagging line above the candlesticks, and we don't see it there. In fact, it's reacting to the top of, it's reacting to this Kijinsen line. See, so it's struggling. So I don't like this long right now yet. I would wait. I need to see more bullish indicators. I need to see the Kumo Breakout, the lagging line above the candlesticks, and a bullish twist forming in the cloud. So all of those are solid indications for a buy signal. Let's look at a long-term trend. Another one I don't care for. This thing's trading on some kind of bullish news or hype. Quite often they get to an area like this where the chart seems to have topped out in the past, and this thing could just bleed off for months or years. I really don't know what the bull case for this stock is, but those are just signals to watch out. I'm into technicals, so that's your technical breakdown for that one. SESN, pretty bullish looking chart, a little overextended. Nice support area right here at the bottom of this flat bottom. It's responding nicely to the 50 moving average. This looks like a great buy opportunity right here. Now we've got a TK cross. If you want to trade this, I would watch for a reaction with this previous top right here. That's a bearish engulfing candle, and price turned it down from there. So you got resistance up here at about 350. So to trade the TK cross right here, I want to see price continue to trade above this Tenkan-sen line in white. And quite often an easy way to track that trade is to come down to a 30-minute chart. Okay, I would trade a 30-minute chart for fast momentum on this, and you can see how we broke above and we come down and test near the cloud and bounce. So I would look for that to continue to stay in this trade. So right now I'd look for another pullback. If we see a pullback near the cloud here around $3.15, you might try an entry there. This little consolidation piece right here is weak support, but it is some form of support on a short-term basis. Rising Kijinsen, this can act as support. So I kind of like this $3.15 to $3.20 range, if you want to try to get in on that one. And then just watch it closely on a 30-minute chart. If you don't have Ichimoku, you can try a trend line. Just draw a trend line along the bottoms of these wicks here. AESE. We're looking at a 30-minute chart. Let's look at the daily chart. Overextended, we're pulled away from the cloud pretty good. Getting some nice reactions to the 50 moving average. When something is trending like this, that 50 moving average is pretty common ground. So I think it's overextended here, and a pullback is in order, especially since we're getting these long wicks here. Pardon me for a second. A little sip of coffee to keep me going here. Let's look at a long term. Yuck. Tradable, investable, I don't like it. Don't know the story, I'm just looking at technicals here, okay? So be careful with that one. Pull back to the 50 is your best opportunity on this, is what I see. Or pull back to the cloud. But it is very bullish at the moment. MVIS. This thing has seen some nice gains. Showing some signs of weakness, but it's hard to trade the TK cross on this one because it crosses back and forth. The momentum is so fast that the two indicator lines are kind of hugging each other. So we get overextended and then it pulls back and then we're going to try to cross again. So I'd be trading the 50 moving average and the cloud on this. We got kind of this stair-step pattern here. This was a nice base of support right here. And a little bit of support here. Of course, the 50 average, we're pretty close to the 50 average right now. And it looks like it's trying to make a TK cross. So this could be pretty tradable right here. We're right here near the cloud. Not really overextended in that aspect. But as far as gains in a short amount of time, it's up quite a bit. It's been a change in trend here where it really broke out right here, and definitely a change in price action for this stock. Let's look at a long-term trend. So that's a pretty steep trend, and I wouldn't look for that to continue forever. Especially looking at the long term here. Like I said, I like to draw trend lines on stuff like this. So that's kind of scary. If you're in this one, it looks like it's okay to hold it. You just need to keep an eye on it and watch for price to ultimately eventually fail this 50 moving average and fall below the cloud. And that's where I would take profits. When candlesticks begin closing below the cloud, sometimes you'll see one and maybe it'll bounce and it'll go back into the cloud, maybe even break out again. But when you start to see price trending below the cloud, that's a signal to take your profits. So we had some weird price action back here where we tried to break out. We hugged the top of the cloud, broke down again, tested the top again, and eventually broke out. This is a lot of consolidation, so the cloud is kind of thin and spindly and not very reliable indicator. Ichimoku doesn't work that well in areas of consolidation. It works well when you're trending. Okay, now we're getting a nice trending cloud. The cloud is thickened out, providing us with some flat areas indicating support. Moving averages are widening out. So pretty bullish at the moment. I just, like I say, long term, look at this thing. I'd just be really careful here. This could just be hype. People see something break out like this, everybody's jumping on it. And at some point, it's going to run out of buyers and people want to get their profits. So I don't really like trying to enter it here. You just got to be real careful if you do. Let's look at a 30-minute chart. Got some consolidation going on here. Okay. This is kind of difficult to trade on a 30-minute chart. All right, let's look at MWK, Mohawk Group Holdings. This stock has had a huge bullish move from $9 to $50. Yeah, 500% gain. TK cross going down. This looks like it could break down here. We're below the Kijinsen line. We're below the top of the cloud. Price could try to hug this cloud. I would look for a TK cross, and we want to see price above the Tinkinson line like you see here for a long trade. And definitely look for price to stay above the cloud. A lot of price action right here with these wicks, and this looks like a kind of a substantial top to me. So this one I would say be careful with it. If you have profits, I would just hold it for right now. If you've already endured this pullback, this TK cross was actually a sell signal, and then you get back in if it crosses going back up is the way I would play it. But or you could play the cloud. Looks like we're breaking down below the 50 average here. We tried to bounce from it here, try it again, and now we're kind of trending below it. We're trying to recover. Looks like here. This could go either way. You're kind of trapped between support and resistance here. More resistance at the top. Long-term trend. That was a pretty bullish breakout right here. This was a trading opportunity here. See, there was a lot of resistance right here. You see that? A price has been here, trended down, got here again and consolidated, and this was your breakout. And look how we reacted. That was a nice breakout from this consolidation area and resistance. Kumo breakout, broke out of the cloud. So I think the opportunity for this stock is getting a little late. Just be careful with it. Look for this TK cross and another breakout if it's going to do it. BOXL, Boxlight Corp. Haven't even heard of this one before, but we'll look at the technicals here. And we've had a technical breakdown, big gap down here, fell below the Tinkinson line, trending below Tinkinson, sharp drop. Now we're reacting to the cloud. Quite often a reaction to the cloud is normal, but the shape of this cloud is telling me, I just have a feeling it's going to fail here at the Kijinsen line, downtrending resistance here. If it breaks above this, we're going to look for the TK cross and candlesticks above the Kijinsen right here. And ultimately we'd be above the cloud to get back in a long-term trade. For this gap down here, right here, that was a sell signal in my eyes. I don't know if I'd have waited for a TK cross on that because of this gap down here. Something that's up that much in that short amount of time is very risky. Let's look at a long term. Yep, another chart that I look at and I say, yuck. Very tradable, but you just got to be careful and you got to know how to trade these. And it's broken, it looks like it's broken a downtrend and attempting to form a new uptrend here. We are to see some resistance here. So a long-term downtrending chart like this has a lot of areas of resistance. I mean, you've got a lot of wood to chew to start forming a reliable, stable uptrend that makes it safe for investing. Or so I look at things like this as a trade. Six-month. I like looking at 6 months chart. It just gives me a nice. This is a daily candlestick, 6-month time frame. So it looks like we're trying to hold this 50 moving average. So I think I would use that to base my trade. If you want to trade that, it does look like it's breaking down though. All right, so that's it for those. Hope that helps.